we will bring you over to have a look at gold first, and then we'll break it down for you, the correlations. We'll look at the US dollar, we'll look at gold, euro, we'll look at silver, and we will look at oil as well. As always, any questions or comments, feel free to post those into the chat. So first of all, we are going to start off here and we are going to look at gold. And if I just rewind 1 week and we go back to approximately this time last week and what was happening with gold, essentially we had seen gold break down after it rallied all the way back up towards a 200-day moving average, hit that spot on at 1,263 US dollars per ounce at the end of February. And since that point, we have continued to see gold break down. In fact, you can see here where we've had consecutive lower highs and lower lows here over the last 2 weeks, eventually causing a 50% correction in gold. Now, it is noteworthy as well, if we go back to approximately a week and a half ago, where we had Janet Yellen, delivering a speech, and also several FOMC members providing updates revolving around the March 15th FOMC statement, which has just passed. There was overall a lot more confidence in the Fed going ahead with an interest rate hike on yesterday's FOMC statement. And as a result, that was when gold was trading around 1,236 US dollars per ounce. As a result, we saw an acceleration in price to the downside for gold, silver, a number of other commodities. The US dollar rallied, and we saw to a certain degree that get priced into the market. So we already saw that get baked into the market, the prospect of the Fed going ahead and increasing interest rates. And I've had a lot of questions on this over the last 12 hours, really, since the FOMC statement came out, or just over 12 hours or so since we had that FOMC statement. And why is it that the Fed went ahead and they increased interest rates? Why is it that the dollar sold off? And why did gold, silver, a number of other commodities, why did they go up? Shouldn't they go down? And there's a number of factors for this, but one of those being that a lot of the move has already been priced into the market. It's a case of sell the rumor here and buy the news. Now, there's a few other factors, of course, which have gone into that. The overall statement was more on the side of the doves. It was dovish. In fact, where originally we were looking for more interest rate hikes to occur over the course of this year, that seems to have been a change now in terms of the aggressiveness which the Fed are going to go ahead with interest rate hikes over this year, although we'll see in the weeks and the months to come what transpires. But essentially, it was not as hawkish or aggressive. The Fed wasn't as aggressive as anticipated regarding interest rates this year, interest rate hikes, and as a result, that has provided a perfect storm for a breakout here on gold. Now, technically, we lined up quite well here for a breakout. We at the Gold and Silver Club have caught the trade at 1,212 US dollars per ounce. This is the level that we are in the trade at the moment. And overall, it's been quite a nice pop just yesterday into the close. And in fact, this morning we were up over about 210 points on this trade. We are looking short term for more upside here. So I would be looking for a bit more upside here. You can see right now as we're going into the US session that there's a bit of a battle around the 21-day moving average. We've taken out yesterday's high. We've already popped higher on gold here, and we're looking for some follow through, taking gold up to 1,236 in the short term. That is quite an event area. There are a lot of orders sitting around the 1236 to the 1237 zone. It is quite a major area here, and short term I would be interested in banking some profits at that level and then seeing how gold reacts. That's assuming that gold can get to that level. Typically, after an FOMC statement, there is up to 48 hours of follow through. And normally you get, particularly if you see a big move like we did yesterday, and you would expect follow through going into today's close and also tomorrow. Now, by the end of the week, things could change. We could get into an overbought condition short term for gold. The US dollar might then be in a significantly oversold condition, could snap back as we go into next week. But momentum right now is on the side of the bulls. The buyers in this market have the upside advantage. The bulls in this market are in control of the chart right now. And I am looking for more upside short term here. I'm looking for approximately about another 90-point move, taking gold up to 1,236, around that zone in the short term, and then we will see how gold fares once it gets to that level, if we do get to that level. What I would also be aware of at the moment on gold, if we go out here, we can take a raw chart at the moment, is the possibility of gold coming up to around the 1236 zone and creating a lower high here as well. So what that would look like would be the potential for gold here, and I will just draw on these levels here. So around the 1235 to 1236 zone, a potential breakout to that zone. If gold cannot get above that level, if it pauses at that zone, it does have the potential again for a head and shoulders pattern, the potential to roll over and break down lower. So I would be careful here in terms of not getting too aggressive on gold at this level. I'll be looking soon to take profits on a revisit the upper end of the trend channel. If gold on a closing basis, if it breaks above 1236, I would look for a move back up towards the recent highs here of 1264 if gold can do that. Otherwise, I would be looking for the potential of gold to then come back down again, get exhausted at this level, and then I would look for the potential for the US dollar index to also start to get supported.